Simplicity is the outcome of technical subtlety. It is the goal, not the starting point. Maurice Saatchi. My friends, that is what we strive for, is simplicity. We have gone through dozens and dozens of indicators, all of them promising everything. And what have we come back to? The simplicity of candlesticks. And again, it's a special candlestick. It's the Heikin-Ashi candlestick that cuts out so much of the noise to help us focus on the signal, which is price movement, which is the real direction. Average pace is what I'm told Heikin-Ashi stands for, or the way it is translated. But what we are looking for is being able to see what's really going on with price and not getting confused by all the different symbols, the different codes, all the things that you see that everyone's always looking for by making candlesticks so complicated. We keep it simple. And also we use what? We use the volume metric, which is so helpful. And again, I explain over and over, green volume simply means that it opened higher than the prior close. Red volume opened lower than the prior close. It's again, more information that you can use. It doesn't mean down or negative volume. Don't be fooled by that. And of course, we use the average. We like to see the running average of the volume to know if we're below average or above average, or just average, and we love trend lines. Okay, let's jump into these charts. Everything is up for the day, but bonds, they are down a little over 0.5%. Let's look first at the S&P 500. It's up 0.59%. Down yesterday, didn't continue, didn't break the weekly trend line in the morning or afternoon, and then popped up on Thursday. So again, we have a green up candle for the week. Maybe we'll get to average volume. You can look at the latest 2-day. Not a lot of volume there. Not a lot of volume on the half-day chart at all. In fact, haven't even had average volume since last Friday morning. So again, we'll keep an eye on things and see. We look at the high this week, 672.99, 673.95 2 weeks ago. So we've not hit the high before. We're just sort of hanging up there. What are we going to do? Are we going to digest these prior gains and pop off again? You know, we got 2 dojis in a row over the prior 2 weeks, and this week a green up candle, but not hitting the higher high. So we'll keep an eye on things. Maybe this market's getting long in the tooth. Maybe it's just digesting the prior gains, getting ready to pop up again. We'll see what the catalyst is in the future, could be tomorrow, for whatever's going to move this market up or down in the fall-winter trading zone. Right now, we are still decently, very decently long the S&P 500. What do we say on the NASDAQ 100? Up even more, 0.84%. And again, we look at the high from a couple of weeks ago. That was 613.18. This week, 612.80. Last week, 608.31. So again, unlike the S&P, we have hit a higher high than those. We hit a higher high 2 weeks ago. And this week, we have not hit a higher high. And with the S&P, we hit 672.99 this week, 663. So on both these charts, we have not hit a higher high this week than we have 2 weeks ago, or even last week. Last week was lower. And what are we looking at? Again, on both these, just sort of hovering. We're hovering above the weekly trend line on the 2-day chart. We're hovering above it on the half-day chart. We're not reaching higher highs. We're just hanging there. Volume is better on the NASDAQ as far as the week goes. On the latest 2-day chart, it's low. You can see how it has been decreasing over the last 2 days. So we'll keep an eye. I don't know what the market's going to do. It's going to do one thing or the other. It always goes either up or down. Might slide sideways for a little while. We'll talk about gold when we get to it. But again, we'll keep our eye on the prize. The NASDAQ 100 doesn't have as much upward directional probability, just a few points less than the S&P. Both back test accuracies are pretty good. Again, Patreon members, we emailed out to you several minutes ago the 5-day plus ETF trading analysis and execution plan, plus the trade execution summary, plus your weekly vertical crossovers for the week. Now let's move on to 20-year U.S. government bonds. They're the only thing we see pulling back for the day after many days on the half-day chart of up movement, many days on the 2-day of up movement. We have a doji right now with low volume. And on the weekly, because of the up movement that we saw on Tuesday, and then we had some about the same, staying around the same area on Wednesday, we of course have reached a higher high for the week, fourth week in a row. But like I said, pulling back a little bit for today. We'll see how things go on Friday. We're still well above the weekly trend line on both the 2-day and the half-day. And again, we should hit average volume for the week as we are long 20-year U.S. government bonds. So again, little pullback. We'll see how that goes, but count on it to probably continue. Now gold, after we are going in now to the second, this is just the first day, but the second down red candle, gold was up some. It was up in the morning and held on to a little bit of that in the afternoon, up 0.40%. Not a lot of volume in gold for the last day and a half, sitting right there on the weekly trend line on the 2-day. Nice up week thanks to the Friday and, of course, for this week, the Monday candle. And we can see where things moved up nicely on Monday, but hammered down on Tuesday and trying to make a little bit of recovery as we go into Wednesday and Thursday. So we will keep an eye on gold as we ran the numbers on it. Our directional probability is very weak, about 55% and sideways. So we'll keep an eye on gold. It's been very good. A lot of times, things run up like this. Going to be some profit taking. We will keep an eye on things and again, see if the gold down move is telling us anything about where stocks might be going. Is there something the market's reading into that? I just can't tell. But gold has been very good to us over the last few weeks. We will keep an eye on that. We don't want to start giving all that back. Now, let's look at where we are with Bitcoin, up for the day 2.33%. See, it was up a little in the morning, popping up in the afternoon, but still staying below that weekly trend line. You can see where it bounced off of it on Tuesday afternoon, down on Wednesday, and then bobbing up some on Thursday, but not pushing through. We've got a little doji on the first day of the latest 2-day candle with weak volume sitting right there on the weekly trend line. And of course, we haven't hit on the weekly chart the low of last week. So again, still negative down on Bitcoin, and we'll just continue to watch, but we still have all that downward pressure. I told you about that yesterday, and we still see it even with the up move today. That is where we are, my friends. Appreciate the new Patreon members. Again, if you're not a Patreon member, you want to support the work that we do here, we have 3 levels of participation. And of course, when you sign up, first thing you get is my latest book, 3-Wave Trading Advantage, and the 3-part series, Options Made Simple, The Charting Wealth Way. If you're interested in options, we got the training for you. God bless, my friends. All the best from the whole team at Charting Wealth.